3 months ago, the government completed the much-awaited Eurobond issue, raising $2 billion from international investors in the debut sovereign bond, which was the largest ever placement by a first-time African issuer. But even as the state received these funds, it was already exploring options to tap the international market to take advantage of the huge investor appetite that had seen the dollar-denominated sovereign bond oversubscribed nearly fourfold. The state appears to have settled on the next fundraising venture targeting Kenyans living abroad. Changole has this report.
3 months after floating the eagerly anticipated $2 billion Eurobond, the National Treasury is already looking to the international market to raise more funds.
We began the process of issuing a diaspora bond, and we will completing that process very soon.
The state is eyeing the estimated 2.5 million Kenyans living abroad whose remittances have been on the rise, hitting 110 billion shillings last year. And this year it is set to surpass this, having hit 120.62 billion shillings in just the first 7 months of the year. The state plans to denominate the diaspora bond in shillings, meaning it will not carry any foreign exchange risk. Kenya will also offer higher returns than developed markets, which could attract these Kenyans to support infrastructural development in their homeland.
So the return is obviously much higher. So from that point of view, maybe what they're saying to the diaspora is, okay, divert your money from where it's now invested and invest it in this thing which is going to give you a better return.
But the government might be eyeing a mirage in assuming that Kenyans living in the diaspora have funds to invest in the bond.
If we assume that the diaspora is sending money because they have to support their families, have they got the additional money to now invest in a bond?
And even if the Kenyans in the diaspora do have the funds to invest, the decision could impact on remittance flows that have been the last line of defense for the country, following below-par performances in the traditional foreign exchange earners like tourism and tea.
I must question how much impact that is going to have on what we've seen as the traditional diaspora remittances, which were primarily to support their family.
But the move will allow the government to diversify its sources of financing and reduce its reliance on domestic debt, which tends to crowd out the private sector and increase lending rates. The analysts are urging the government to develop a proper plan for the use of the funds.
So if we're going to borrow this money to develop our infrastructure, make life better for the citizens, help the economy to grow because we have a better infrastructure, then that's fine, because the return will be there, and we'll be able to service that debt as well. Let's not use it to pay salaries and to pay, motor vehicle expenses and flowers and teas and toilet paper and whatever else it is that we seem to use in abundance.
Changole, KTN Business.